Well, before we begin our first conversation, a quick look at the markets from yesterday. That's Nigeria's equities markets, where stocks rebounded in midweek trading, led by heavyweight, including Airtel Africa, Bua Foods, and Seplat. The broad index is now up 38.4% so far this year. Let's take a look at the numbers now, starting with the broad index. We saw a couple of sessions of losses, but now it looks like the index has rebounded back from yesterday's trading. If we could just have that up on the screen, up 1.76%, and now above 103,000 points. Let's move over to the session's top gainers. Let's see those stocks that tilted the all-share index back into positive territory. That's a market capitalization up 1.76, but let's have the top gainers to see those stocks that rallied the market yesterday. We have Airtel Africa, the leader of the gains yesterday, up 10%. We have Unity Bank, Julie, FBNH, Morrison, Julie, still on investors' radar, now at 1 naira 22 kobo per share. Definitely a stock to continue to watch. Let's flip this over and see the top losers from the previous session. NCR, Meyer, Boa Cement, one of the market heavyweights that's been bringing the index down 9.91% yesterday. Let's take a look at the sector performance if we have that. The banking index still in negative territory, down 1.85% yesterday. Insurance sector, oil and gas, in positive territory. Consumer goods, industrial goods, of course, that's been brought down by Boa Cement, down 0.10%. Well, that's a snapshot of market trading yesterday. We'll take a quick break and I'll be right back with our first conversation. Join us again. Well, on to our first conversation. Nigeria's federal government is seeking to borrow 2.5 trillion naira from its second FGN bond auction of 2024. That's this month. And that's according to the latest circular from the Debt Management Office. According to the circular, the auction is set for February 19 with a settlement date of February 21 this year. Now, both bonds are newly created papers. It's a February 2031 7-year bond worth 1.25 trillion naira and a February 2034 10-year paper worth 1.25 trillion naira. Now, in the previous month, the DMO offered 4 bonds worth 90 billion naira each. Vincent Oshoma, Head Capital Markets Interstate Securities, joins me for more on this. Vincent, thank you for taking the time out to join us today.
Thanks for having me. Good morning.
Just to get your initial thoughts, so what do you think about this plan by the federal government to borrow over 2 trillion through this bond auction?
It's quite huge when you look at the amount offered in the previous auction. It's quite short in terms of the amount. But it's not so surprising when you look at it's still within the government plan for the year and also current liquidity. I think the government is trying to take advantage of current liquidity in the system. We remember that the last Treasury bill auction, it was oversubscribed by about 300%, despite the huge surge in terms of the rates. The 1-year Treasury bill was 19%. Also, and the government, the subscription at the end of it about 1 trillion, but we had about 2 trillion in terms of the subscription, total subscription. So I think the government is trying to take advantage of current situation in trying to mop up liquidity in the system.
Now, just thinking about yesterday's trading at the bond market, the secondary bond market, yields are averaging around 15.8%. That's on the short end of the curve. But what are your expectations on subscription levels and stop rates for this particular auction that we're going to see in February?
If we are judging by the last auction, we expect, because we have seen increase in rates and also considering the fact that the inflation figures are coming out today, so we expect that to determine to have an impact in terms of the rates. So we expect the rates for the auction to be quite high. And I think from the trading yesterday, a lot of persons are looking forward to that auction in terms of determining rates. So traders are looking forward to what will happen on Monday. And it's expected that it's going to be higher than what was the previous rate in last month's auction.
Now, obviously, this is a reflection of the government's plan to borrow more, at least compared to what it borrowed last year to fund the budget deficit. But this also has implications for debt servicing. But what are your thoughts in terms of, how the government tries to balance, debt servicing vis-a-vis its revenue targets or projections for the 2024 budget?
Yes, it's quite a concern because as much as this, the amount is within government's plan, But when you look at debt profile, it keeps increasing, especially when you look at the devaluation of the currency. The last figure that came out for third quarter last year, I think about 87 trillion. I think it's expected that the next report by DMO should be about 100 and something trillion, which is which further worsens our ability to service those debts. So it's quite a concern. But when you look at the tight situation the government is facing, I think the government is resorting to borrowing, because which is what was common in the previous administration. But unlike the previous administration, I think this government is focusing more on the regular borrowing rather than resorting to the ways and means. I think that's one of the things they'll use to fund their budget. So revenue continues to be an issue to the current government, and they'll continue to look for ways to increase. And one common way they resort to is revenue, and it has an impact on the system, both crowding out the private sector and also the affecting ability of investors and businesses to borrow, because the government rate will determine the borrowing rate of other people in the system.
Yeah, that was going to be my next question. What this means for corporates, that whole crowding out effect that we continue to see at the market, because the government, of course, the bulk of the borrowing stock for the federal government is a domestic bond or domestic debt. Now, but many corporates did turn to commercial papers in 2023 to raise cash to fund their operations. Do you see this gaining more momentum in 2024? And I know that, of course, the rates usually benchmark the FGN rates. What kind of rates also can they look forward to?
Yes, we expect to see more of a lot of commercial papers this year, because as the cost of borrowing it keeps increasing, the corporates will keep looking for ways to reduce their cost of borrowing. Definitely, once there's an increase in government rate, definitely it has an impact, because the risk level will also increase. There will be corporates you are expected to pay a risk premium compared to government rate. So expect to see an uptick in their own rate. But I don't think it will actually reduce the borrowing, because a lot of those corporates, when you look at their loans to finance their existing debt, they will have to look for ways to finance it at cheaper rates, because the rate generally is going up. So they will still have to resort to things like CPs to get money. Yes.
Another part of this conversation is also, and this is on the Treasury bill side, that auction we saw, I believe it was last week, where we saw the one-year paper going for as high as 19%. Now, that obviously is a deliberate attempt by the authorities, the fiscal authorities, or the CBN rather, to attract more foreign portfolio investors into the country, obviously to boost the FX reserves also. Is this a very delicate balancing act for both the fiscal and particularly the monetary authorities?
Yes, I think, like you mentioned, that was a deliberate attempt by the CBN in terms of attracting that, because we definitely need FPIs in the system with the forex challenges. And if you look at some of the moves, what has happened in respect to the rates, trying to achieve convergence between the official rate and the primary market rate, these are different moves. And I think those moves will start attracting FPIs. There are pillars that FPIs have started coming into the system, and we expect to, as we continue to see stability, once the relative stability in the forex market is achieved, I think we start seeing them coming in, which is what the CBN and the fiscal authorities are targeting in terms of stabilizing the forex. I think that's the way they want to go. It's a deliberate act, and it also boils down to one thing, which is what we have always looked forward to, and understanding a close relationship between the fiscal and the monetary policy managers, which was absent in the previous administration. And currently, we are seeing that a close working relationship between the fiscal policy authorities and the monetary, which is good for the system.
Right, you're absolutely right on that one. Let's, as we round up, just quickly broaden this conversation. There are ongoing conversations, as you know, on the debt levels, rising debt levels across sub-Saharan Africa. Nigeria is also a classical example. Now, some of the conversations I've had with some market analysts is that one of the reasons why we see many countries on the continent owing having huge debt stock, especially on the foreign debt side, is because they have very underdeveloped and shallow capital markets that are unable to meet funding needs, especially for the fiscal authorities. But when you think about the Nigerian capital market and how it's been able to serve the needs of the fiscal authorities in the area of raising funds to fund the budget deficit, how would you assess the depth of our market?
Yes, you're right in terms of the market has been able to meet the needs of the government in terms of borrowing, which is good. But when you look at our market, there's a lot have been done in terms of the debt side of the market, but a lot still needs to be done in terms of the equity side. When you look at the size of our market relative to our GDP, compared to the South African market and the GDP. So a lot still needs to be done in terms of deepening our market and developing our market. But a lot has been achieved, especially with respect to where we are coming from with the debt level, the debt market. But still much needs to be done.
Right, so Vincent, we'll leave it there. Thank you so much for talking to us today. We appreciate your time on the show. That was Vincent Dushoma, Head Capital Market Interstate Securities, sharing his thoughts on the federal government's plans to raise over 2.5 trillion naira this month at the FGen bond auction. We'll take a quick break and we'll be right back with our next conversation. Join us again. Welcome back. International investors greeted the removal of Ghana's finance minister with caution on Wednesday, bracing for the prospect of more delays to the restructuring of the country's overseas debt ahead of national elections in December this year. President Nana Akufo-Addo on Wednesday announced Mohamed Amin Adam, the Minister of State in the Finance Ministry, as Ken Ofori-Atta's replacement. The former finance minister has been leading efforts to get Ghana's finances back on track, including negotiating a domestic debt exchange program, an agreement reached in January with bilateral creditors, including the Paris Club of Lenders and China, to restructure $5.4 billion of external debt. Well, joining me to share the ramifications of the finance minister's removal is Patrick Ba Abakwa, financial analyst and investment advisor. Patrick, thank you for joining us today.
Thank you for having me on your show this morning.
Was it a surprise to markets, to you, to the entire country when the president announced the removal of the finance minister in that cabinet reshuffle?
I think, yes, a bit of a shock in the sense that people wanted this particular decision taken somewhere last year when the challenges that we faced as a country was at its highest peak. So when the finance minister passed through that kind of fire, the assumption was that perhaps he is going to be at post till the current government's tenure ends on January 7, 2025. So for us to see him being removed as part of the reshuffle was quite a bit of a surprise. However, in the heat of the moment when people were calling for the removal of the minister last year, what government said was that they wanted the minister to take some kind of key decisions in the IMF discussions before the possible change or removal happening. So looking at where we are now in terms of closing the local debt exchange market and also some significant steps with the foreign bonds decision makers, I think that government wants to take the decision at this point in time to be able to add someone else to continue. But if you look at what has happened after the decision to make him step aside or remove him, we are hearing that he's going to be made the special advisor when it comes to decisions on investment at the presidency. So which means that he can still be given some kind of role to lead discussions going forward, but not as the Minister for Finance.
And I know that in the last couple of months, the finance minister came under heavy criticism, especially of his handling of the economy. But he has been the face of this very crucial debt negotiations with bilateral creditors, the Paris Club of Lenders, and very importantly, the IMF. Now, while it may have been politically expedient for the president to remove him at this time, he remains the face of the negotiations. What does that mean for, confidence levels? Because there's still a final phase of the deal, which the former finance minister was hoping to close by the end of March. What does this mean? And can you give us a sense of how the creditors, the international community are processing all of this?
I think when you look at the minister that has been nominated for Minister of Finance, is someone that was already part of the negotiation discussion or the table. So he's not new to the discussions, and he's not someone that the creditors are not aware of. So in that sense, I think that the discussion will not be too much affected by way of progress that has been made so far. As I said earlier on, the discussions we are hearing is that it's going to be made the special advisor to the presidency when it comes to investment. That's the former finance minister. This also gives an indication that he's still going to be part of the team that will be negotiating with the external creditors in this particular regards and going forward. So I'm not too sure it's going to really affect the status of that negotiation as we speak now, because he himself will be part of the discussion, and also the finance minister that has been nominated was part of the team that started the negotiation from last 2 years. So it's not going to be a new phase that will be leading the discussion going forward.
All right, so now speaking of negotiations, the final phase of Ghana's debt restructuring includes a $13 billion in euro bonds still being owed to creditors. And I know that obviously they're having talks with key creditors such as China. Bring us up to speed in terms of where we are with those negotiations. I know, like I mentioned earlier, the former finance minister was hoping to wrap things up by the end of March. Are things still looking good?
I still think that these creditors are looking at the conditions that have been proposed by the Minister for Finance, that's the former Minister for Finance, and also the team that has been negotiating with them, looking at its impact on their finances going forward. So that kind of discussion has been at the deadlock for the past 1 month or so, even though the projection for the Minister for Finance was that everything will be ended by March. Where I sit and discussions that have gone on, I think that the March may be a bit of an ambitious target. Perhaps it may extend beyond March to somewhere April. But I think that eventually the external creditors will come to the table and agree to some of the conditions, and also change some of the conditions from the proposal that has been submitted by the Minister for Finance. So all in all, if March is not a deadline that is being able to be met, we should expect that it should travel to somewhere April before the discussions will be concluded. Because where we are now, most of these creditors are at the point where they appreciate the fact that if they don't sign up to this kind of agreement, their funds is in danger. So it's a matter of looking at the conditions to see where we can tweak it to suit them, and where they can also make some kind of adjustment and also compromise to be able to get the agreement signed off finally.
Right. Now, this new finance minister, he's not only going to be overseeing the rest of the debt negotiations, he's also going to be overseeing the economy. And now, just looking at Ghana's latest inflation numbers that unexpectedly went up in January to 23.5% year on year. Talk to us about, I guess he hasn't made any official statements yet, but from what is known about him, his experience, etc., what would you say is the level of confidence in terms of how he's going to begin to try to get the economy moving as the IMF plan is also in motion?
I think that it's quite unfortunate that he has limited time to put things in the right perspective by way of trying to push his own agenda as a Minister for Finance. If you look at his background and what he has done in the past as an economist, I am in no doubt that he may be able to bring some kind of revival in the economy, because for the last 2 years, most of the players in the financial sector and the economy as a whole have lost some kind of confidence in the current finance minister because of some investment decisions that he took in the past. So to bring someone who is coming with his own ideas at this point in time may give some kind of confidence or freshen up some kind of atmosphere in the Ministry of Finance, coupled with the fact that, as I said, he has a bit of experience in managing the economy. So it's going to be a goodwill for investors by way of engaging someone new. But in terms of time, I'm not too sure he has a lot of time, because Ghana will be going to the pool somewhere in November or December this year, which is just about 6 or 7 months away. And I'm not too sure he may have the time to be able to implement a lot of things. Don't forget, he's also a member of parliament in Ghana, which means that he also has some kind of alignment or some kind of responsibility towards his constituency that he leads. So it's a bit too late for him, but if he's able to put his feet down to be able to drive the key component like inflation, exchange rate, then he may be a minister for a very short run, but may be able to impact so much by way of accomplishments within the period.
All right. Speaking about those elections in December, if there's one thing history tells us is that there's always an uptick in spending, political spending, and sometimes even at the fiscal level. Now, I remember this is something that the IMF had discussions about at the initial stages of the $3 billion deal, but there were assurances given by the fiscal authorities that spending will be kept at very moderate levels. But you know how these things go when elections come and the momentum picks up and then, things get lost in translation, etc. Are you concerned, are the markets concerned, and is there confidence that the fiscal authorities will be able to rein in spending?
We look at taxes that have been introduced so far this year by the Minister for Finance over the last, let's say, 4 months or so when the budget was read last year. These taxes are expected to rake in some kind of income to be able to augment the shortfall in our revenue as a country. If that is managed well, coupled with some kind of measures to take off excess in the system by way of revenue that the government loses through some kind of corruption or some kind of mishaps in the system, then we should be able to manage ourselves without going overboard when it comes to our fiscal discipline. So I think that because IMF is in town, and whenever IMF is in town, they sometimes are hard on some of the decisions that the country takes. So because they are in town around this time of election, I'm not too sure the minister will have so much leverage to go beyond a certain limit when it comes to expenditure, because they have a country director who is always part of the process in terms of approvals and also some spending habits. So it's going to put a bit of brakes on what the minister can do, and there is not too open for them in terms of what they can do. So I think that we may end the year within the fiscal discipline mark that we have agreed with IMF before the bailout was granted somewhere last year.
Right, Patrick, thank you so much for talking to us, helping us sharing that perspective on the removal of Ghana's finance minister. Patrick Ba, a Bankwa financial analyst and investment advisor. Thank you for your time today. We'll take a quick break and I'll be right back with our international headlines. Join us again. Welcome back. Nigeria's local currency, the Naira, continues on its price discovery journey, but we're still seeing it trading at elevated levels at both the NAFEM market, that's the official market, and the parallel market, hovering around 1,400 levels. But this week, we did see the Central Bank of Nigeria selling for the first time at the spot market about $86 million to bidders. But we did speak to some analysts. We bring to you one of them who talked about the reforms, the FX reforms, actually are beginning to show some green shoots in terms of how the monetary authorities are trying to, of course, ensure that the Naira continues to gain some more strength. We spoke to Dick Bajayi, head of FX at Chapel Hill Denham, and he shared his thoughts. So take a look.
To ensure that the Apex Bank isn't gagging the FX market. They actually want the market to trade freely because in a situation where you limit the trading band of the market, one way or the other, you're already saying, oh, this market can't trade beyond or below this level. So it's a way of gagging market, and I think that's what the central bank is trying to do. And one good thing about it is that we'll be seeing this back-to-back specular from central bank around FX to shaping the FX market. And the last one, which was about removing the cap, was a very great one because it simply means that you can quote whatever range and you can trade whatever range. And like I said earlier on, the only thing that's still lacking in the market is liquidity. And one of the reasons why you still see people actually quoting as high as 1,500 and above was because there's no limit to rates that you can actually quote on the market. And when there's demand, and there isn't supply in the market, you tend to see people demanding will likely want to buy from that elevated levels, and that's what we've been seeing in the past days. But with the emergence of central bank back into the market after close to about 5 months off period, I think it's a good news to the market because it simply means that people can actually buy directly from banks based on the allocation from the central bank. So I think in the matter of time, we will tend to see market trade more reasonably and also trade in a way that it will be in tandem with some of this policy. I'm very sure International Monetary Organization like IMF, World Bank, they're actually excited with some of this reform, knowing fully well that this will further open up our market and also attract foreign inflows in the market.
Dikwa Jai, head of FX at Chapel Hill Denham, bringing us up to speed on the FX reforms, and looks like the Naira is making some progress and will continue to keep an eye on it. So that's it on this edition of Business Edge. Remember to follow us on social media. We are at News Central TV. From the team and I, it's bye for now.